Good afternoon, everyone. Thank you for taking the time to be here, and I hope you enjoyed the session. Actually, take advantage that this is a pretty small crowd, so feel free to stop me at any time, ask questions, and even if maybe it's not related to the topic I'm talking about, take advantage of it, and I'll try to do my best to either answer the question or perhaps point you in the right direction of someone from ConsenSys that perhaps could give you a little bit more of insights about this. So let me first introduce myself. My name is Carlos. I am original from Nicaragua. I actually got involved in the blockchain space like in 2013 because I had a startup that back then we were using a lot of managing a lot of documents, and using DocuSign didn't feel like, oh, that's so nice for a startup, and we kind of figured out a different way, and that's how we come up with Bitcoin. And from there, I actually ran into Ethereum, and little by little, my interest in blockchain just grew and grew. And hopefully, a few years later, I actually ended up in ConsenSys. So I'm in the company for the past 2 years. So for those of you who don't know ConsenSys, I guess it's not easy to have a single definition of it, but ConsenSys is one of the, if not the leading company in the Ethereum space, in the technology. So in the blockchain space, you have cryptocurrencies, that's one side of it. Then there's the blockchain space, where applications and smart contracts and the other different applications that you could do on the blockchain reside. And that's where Ethereum is. Ethereum was developed or created by the Ethereum Foundation. One of the co-founders is Joseph Lubin, who founded ConsenSys. So even though the Ethereum Foundation and ConsenSys, we worked very closely together, Ethereum Foundation is kind of trying to build the infrastructure layer, and ConsenSys is mostly about the application layer, even if we do a lot of the things together. So just to make it simple, it's like Ethereum Foundation is building the roads, we're putting the cars on it, kind of to make a simpler analogy. And ConsenSys has a lot of different things. We have a lot of different products for different applications. We have consultancy arm and many other things. And we have an educational arm that is called ConsenSys Academy. And basically our goal is to to grow the ecosystem and to figure out a way that companies, when they need to leverage the technology, they either have the skills in-house to leverage it, or they're able to find people in the labor market to hire to be able to build something on the technology. So we train different ways, and we do online, in-person, remote, basically almost any format. And content licensing, we actually have different programs for enterprises in the on how they could build solutions on a permissioned or enterprise environment. All right. So just for the people here, we have this code in case you're interested in any online training of ours. If you're technical, you'll be looking at any on your right side. And if you're just looking for understand the technology pretty well, for someone who either technical or non-technical, but you want to get into our blockchain essentials course. And if you're pretty skilled, we have certification so that you could get certified as either Ethereum business professional, smart contract developer, or Ethereum developer. So those are all the things that we're doing as a part of the give people something that differentiates them from other developers out there, so that they could be hired fast or easier by companies by identifying them. Oops, sorry. And yeah, that's it. So today, it's supposed to be about an hour. I think I'm gonna be talking about 35, perhaps 40. And then we could open to questions, but feel free at any time during the session, if there's something I explain or mention that you do not understand, to interrupt me and just say oh, could you please elaborate a little bit more? So we're gonna do a little intro about tokenization. So we'll talk about a little bit about tokenization so you can understand what the concept is a little bit. Why is it so important or relevant since the last couple of years? We'll go through a few applications and use cases so you understand a little bit how banks are leveraging it, or what are the opportunities that this application of the technology enables for the financial sector. Some business opportunities, like ideas or things to consider when you're actually trying to build something on the blockchain, and then of course questions and answers. So let's get started. And to get started, I would like to open a question to you to see if anyone feels comfortable to answer. What do you think is blockchain first disruption or first main disruption in the market? What was it? Anyone want to take a guess? Manuel, looking at you. You can't. There's no right answer, so don't worry. You're not at risk. You're on the right track. So I agree with you. Probably I should have said in general, not the enterprise. So I agree with you. Kind of, it goes around there, right? Actually, one of the big things blockchain did was, in the digital space, everything is copy paste, right? So it actually figured out a way that you could have ownership of a digital asset or anything digital without the need of a third party or a trusted party, which doesn't sound like that revolutionary, but indeed it is, because it changes a lot and it opens a lot of possibilities. And I'm hoping that by the end of the session, you also understand that very well. And because we now have ownership, or we could own an asset and we could, prove it ourselves and everything, it actually opened the door to many different applications of this, let's say, innovation. And I want to talk about tokens. So tokens are not only cryptocurrencies, which are most of you probably have heard or are most familiar with, like Bitcoin. Tokens could be anything. Tokens is a representation of a digital asset or physical asset. And it could be a bicycle. It could be your birth certificate. It could be many things, a token, right? And there's this, so there's the tokens, and there's of course cryptocurrencies that are basically our economic value, or a way to exchange value, economic value across parties. It could be peer-to-peer, which is mostly on the public, but it also could be on a permissioned or private ecosystem, which is kind of what we're going to talk later on. And then that also came to another concept, which is called the stable coins. One of the big issues you're having with cryptocurrencies on the market is that they're very volatile, the volatility of the currencies. So the price fluctuates a lot. So somebody said, like, okay, what can we do so that we could provide more stability to those? And the concept of stable coins emerged as something that is pegged to, I don't want to say an asset that is not volatile, but let's say that it doesn't change as often or as dramatically as Bitcoin or other cryptocurrencies, or like the US dollars or the gold or everything. They also fluctuate, but not as big as it happens with Bitcoin and everything else, right? And one specific thing that, so you understand, even though that's, for those who don't know, that's the symbol for Libra, which is being called Facebook cryptocurrencies. We're going to talk about it later today. But even if it's being the word used to describe it is a cryptocurrency, is not accurate. It's more of a stable coin, because as when we describe it and we're going to talk about it, you're going to see it has a reserve. So it's pegged to something that makes its value more stable or less volatile in time. Okay. So the thing is with tokenization is that as the technology evolves, as well as more potential, and actually as the people realize that this technology is pretty good. I mean, Bitcoin has been around for, I guess, 10, 11 years now, and it's been uptime running 100%. It has never stopped running. That's more than any bank of the system of any bank right now. You always face the fact that maybe for a small period of time, your bank is running with issues or has issues or load or anything, right? That has not happened with the technology out there, and because how well it has performed despite some of the challenges and limitations that it faces, it has got a lot of the attention, and they have figured out a new ways to use it on the more enterprise level, and this is where tokens come from. And basically what they're doing is issuing bonds, or, for example, tokenizing a property, or for raising money, or different kind of mechanisms and vehicles that are quite interesting to use. And it's been used quite around the world, and definitely the finance sector has its eyes on it. Why would they be interested in doing this? Well, there are several interesting features there, but it's mostly some competitive advantage in the fact that they could automate or process a little bit, do all the settlement that usually banks have to do in a better way. That reduces, of course, a lot of cost and a lot of the cost of intermediation as well as distribution. It has a lot of benefits there. Also, it opens, it's a better experience, or it provides additional value to those parties that usually, like, the finance sector is involved with, like, for example, investors or buyers or anything, because you're now able to not only perhaps buy, let's say, probably in a similar experience that you did before, but you also you enable secondary markets automatically. They're already there. And that's a big important thing, and actually happens because, sometimes investors are looking for liquidity, are looking for short-term investments and those kinds of things. So the fact that there could be a secondary market for an asset, it's a very interesting opportunity. And another important thing is that there's a single source of truth from the network participants. And a lot of the delays, for example, they always say, oh, but it takes 10 minutes to Bitcoin or 2 minutes to Ethereum to reach consensus and all that. I say, yeah, definitely it is. So it doesn't go that fast. However, you know that the finance sector actually takes 24 hours for them to reach consensus. Because at the end of every day, they do the settlement. And until everything has been settled, there's actually no formal consensus among them. They have trust that the data is accurate and that they're gonna at the end they're gonna reach consensus. But to be honest, they do it in every 24 hours, about 24 hours depending on different things. Also, another important thing is that it has also provided, it has helped that standards have been implemented in the space. So most of you probably have heard of it, but even you don't know the RC20. That's, I don't know how many of you are familiar with the ICOs or initial coin offerings or token launches. All right, so that's the standard that they were using. Basically, just to give it a short is, I want to have my own token or my own cryptocurrency or a utility token or whatever you're using, but I don't want to have to build the whole blockchain, the whole infrastructure. So I'll just reuse Ethereum's. Ethereum has about 8,000 nodes out there. I know it works. Everybody has trust on it on the public Ethereum, the public blockchain. So I'll just want to reuse that. So you have this ERC20. So you'll be able to launch a token that it runs on Ethereum and gets all the benefits and all the services and everything that you get from using Ether or Ethereum itself, right? And it became a very interesting mechanism to raise funds. A lot of startups got funded this way, and even if equity, like the usual that you get on an early round or like seed round and everything, it's close to $1 million. The average of the deals that they were getting with the ICOs, it was over $3 million. So it was a quick way. Clearly, there was a lot of hype, a lot of other things around it that probably right now are not. We've seen that the ICOs are not happening as often as they were, and those that did happen a little bit after the hype were not raising that much money. There was a lot of people that just fear of missing out on the next big cryptocurrency or the next big investment opportunity. But then, because of that and that success of how well it worked, other people said, "Oh, this is useful, but if we add on to this, it could actually be something that banks or institutional entities could actually, leverage." So this is why other standards like the RC777 and the 1400, enabled and came out so that you could have other features that actually institutions use or currently use. So those are, and probably more standards will come along as this begins to happen, but it's very interesting to see how they evolve, and it's very easy to follow them because everything is published online, so you could actually, keep up with them very easily. So to give a little bit more, I'm gonna demos. I'm gonna have to turn around to show you a little bit just to show how easy it is in a way to issue a bond or on the blockchain. This is one. Now this has changed. Now it's called Codify in ConsenSys, but this was actually before it was called Asset Factory. So let me just walk you, and I'll be pausing as I go to explain a little bit what you're seeing. So let's say, okay, you have your own user, you have there, you have your own account created. Let's say that, a bank has been giving you this service. All right, so that over there that is popping up, it's called MetaMask, is one of our applications. Understand it is kind of a wallet. But basically, it's important here because everything that you do on the blockchain is signed by you. So let's say that this application that you're seeing here allows you to sign something and to make it unique, so that that your signature could be traced to you and that it's only you who have done it, because that's one of the properties of the blockchain with the public-private key. So let's say this manages your private key and allows you to sign transactions so that you could, in a way, keep traceability of everything that relates to you, and everyone could trust that something that you have done, it's what's done by you, because you are the only one who, let's say, holds the password or the capacity to use that specific public address, right? So this is called, let's say, issue 3. Okay, so what you see here, let's say they have, I want you just to pay attention to what's on the top on the right, which says 150,000 or 150 million, I'm sorry, credit line. So this is someone who has been authorized to have that. And this person wants to issue bonds, or this person, entity, or whoever it is wants to issue bonds. So because they have that amount disponibility, they could directly start as long as they don't go over that line of credit. So let me pause it again. So I'm not going to go into the details of everything, but let's say that this is where you put all the terms, all the conditions, and all the information that is relevant to the bond that you have, like interest rate or whatever, or all the conditions and everything that it's set and it's been given. And so you basically, all you have to do is like you just put there everything that you need to have, and you set it up, the dates, starting, everything, all the different things that you need to do. Like setting up like the minimum deposit, what's the maximum deposit, and that you will take. Another important thing that I want to show here is that all those parameters that you've been seeing are automatically introduced to a smart contract that handles the signature of the terms or terms and conditions of that bond. Because you, as the entity that are providing this, you want this person to follow some legal rules, or someone whoever buys or anything also commits to that, right? Usually, like you need to sign something. So this is possible to do as well. So this is an application called Open Law, where you have legal contracts, all the terms. So basically all the information, you just put that there, and you have all the readings, all the terms that, all the writing, and you have that, and you definitely would have all that, and everybody who buys or sells and everything would be kind of also signing those terms and sheet, or their terms and conditions. So you also have that on your side. And this, when it's that you just seen, basically it's like, okay, I filled everything, now I'm issuing this, I'm signing this. So that transaction that has just been issued there is signing kind of let's say the terms and sheet that you have been committing to. So if you do something wrong, well, the bank or whoever you're working with on this platform, will have that terms and you could be held accountable or liable for something that you've done against or not properly compared to what you're supposed to be doing based on the terms and sheet that you just signed, as well as anybody who's a buyer or investor on this, or seller, sorry, buyer or seller, right? And basically all that gets deployed to the blockchain. Of course, as you can see, you have to wait a little bit because as you have, it has to be committed and everything, but it's there, and that's it. So if you see, that's it. It's been issued. You have a bond over there that is 50 million based on, your credit line has decreased. You no longer have 150, you have 100. And it's already there. It's ready to trade. So now you could be selling that to any other party that gets registered or onboarded into this platform and could have that, So that's how easy it is. And even if, sometimes blockchain sounds like, oh my God, I really don't get it, and it's really complicated. Honestly, there are a lot of pretty tools that you could use out there to make things simple. All right, so that was the intro a little bit to tokenization. So before moving on, questions so far? I'll take silence as a no. Questions, all right? So let's talk a little bit about some use cases. And we're going to talk about 3 different use cases, 2 that are related to banks, and 1 is specifically related to Facebook, because it caused a lot of buzz and a lot of people is interested about it. So I think it's interesting also to understand it as a opportunity for payments, which is the topic of this conversation, of this session. So the issue that was happening, or not the issue, the situation or the challenge on the Philippines is that you would have it's a lot of islands, and you will have a lot of people unbanked, or a lot of people that work with rural banks that they do not have access to international services, or like international remittances, or a lot of different things. So in the aim to figure out how they could do something about this, Union Bank and ConsenSys, they work together on this project that is called Eye to Eye. It could be island to island, institute to institute, individual to individual. So basically figured out that now any company from one island could pay their employee in any other island in a more efficient way. Or if you want to send a remittance to your family in a different island that you are not usually in the big cities where you actually have like the major banks, they're able to send those using the blockchain. In a very not, I mean, in a way, what happened is Union Bank created all the infrastructure in blockchain, because the small banks, they do not have either the money or the infrastructure to be able to be compliant for international regulations and all those kinds of things. So they're not able to hold the IT structure, right? So what Union Bank did is set everything on the blockchain so that they could have it. Every rural bank kind of has a wallet. And so you would go to the branch of Rural Bank 1, you give money. So I'm giving that money because I want to send it to my cousin in the other island. So my cousin in the other island would identify himself or show a QR code or something, and they'll be hand the money out. And basically, what happens is that the money of each of the banks is saved on Union Banks, an account on Union Banks, and they're keeping just track of the balances, and they're settling using the blockchain. It's much faster, reduces cost, it's easier, and it's something that rural banks could do, and that Union Bank is confident that they could do without having any issue with the compliances or the regulatory framework, because on the blockchain everything is working as it's supposed to be working. So that was a very interesting project that is happening, and in a way, the benefit for the users or the people, the unbanked, is to have better financial services and access to other services that they didn't have before, or like to send something in just 15 minutes when it was 2 or 3 days within the same country, for example. For the rural banks to provide additional services to their customers, as well as a new opportunity or a new business line. Now they could have remittances across the whole country, which is something that in the past was not necessarily available for all of them. And for Union Bank, in addition to also this very good initiative for the unbanked, they also withhold all the funds. So they also are able to work with those funds and gain on the interest. So it was a win-win-win for everybody in the ecosystem. And this project, I think, has been running for at least a year now or something like that. And little by little, they're building more and more and more, because now that you have the infrastructure, that now you kind of see that it works, it's really easy to just start building a little bit more on top of that. Then another project that I want to mention is on the South African Reserve Bank, kind of goes on the similar lines. Basically, it's 7 commercial banks on the central bank. They got together to figure out how could they, leverage the technology to settle better. One of the big promises or the big things that we all have heard about blockchain is how it could introduce this efficiency to the settlement process and all that. I think Santander Bank estimated that like $22 billion could be saved by applying blockchain to settlement. So they say, let's test this. So basically what they did is like, all right, we're gonna make a pilot test, 7 of us, and we're gonna test the technology by having real-time gross settlement, with the proper formatting that we need. That's that one that we use. It has to go as fast as we need based on the current system that we have. It should scale easily, and we need the privacy and confidentiality. So they run a test on that, and basically the result was very positive. We the system run on a private solution on an enterprise Ethereum called Quorum. There's a few versions of it, but specifically it's called Quorum by ConsenSys and Adata. And they managed to have 70,000 transactions handled and managed in the time of 2 hours. And what was very important is that 91%, 95% of those, everything was propagated, or everybody had the information within a second. That's very fast, and actually was compliant with everything that they need. So in addition to that, they also got resilience, because now everybody has the information. It works as in a more also confidential way, because everything is encrypted and all happens. So it was a very successful pilot, and they're moving forward as well to figure it out, because one thing is, okay, the technology works. Now we need to enable this from a regulatory perspective. It's not only about, and we have to study what other risks are there, what other problems could happen, and determine. But because of the project the pilot was very successful, it kind of established a milestone for them and the technology to move along. So just to understand a little bit how this happens and how this works on the blockchain, as most of you have heard, blockchain is a shared ledger. So basically, let's think everybody here in the room has an Excel sheet, have the page. And we all have the same information. Why do we trust each other? Not because you trust me or you trust anybody in the room. You trust yourself. Why? Because nobody else updates that information but yourself. So before you add let's say a new row to the bottom of the spreadsheet, you check the information. And if you agree with it, or you check and everything it works, then you add it. That's why, kind of in a way, you trust, because you don't trust anyone, so you trust yourself. So the difference between enterprise Ethereum and what you have on the public Ethereum is that in the public Ethereum, if you see every one of the boxes have like two, let's say one public state and private state. So the public state is what everybody knows. That will be like the same thing as enterprise as the public Ethereum, and that's something companies don't really like about that. They don't want that because they need to have privacy. So enterprise Ethereum has something that is called a private state, which means there's an additional encryption happening to the data of a transaction. That means that basically when somebody transacts within the network, everybody knows that they've transacted, but nobody knows about the details that transaction, that were in that transaction. So if we're all here and we're all kind of, you are all providers and I'm the buyer, I could receive the offerings from you and nobody else would see what terms or conditions that offering has, like what discount you gave me or what was the pricing that you gave me for whatever thing I was purchasing from you. So all that is happening. That's a little bit how, it's done. And if you see, everybody only knows what they have in the private state. On the top, you have, for example, in the specific case of South Africa, the regulator wants to know everything, and they ask to have everything. So, for example, they have the whole private state of everybody, so they could check, right? So, in the case of private transactions, what you do is like every bank, let's say, put $1 million in an account on the central bank, and the bank gives you 1 million tokens. So then, in the network, you're just transacting with tokens. And when you need to cash out, you just say, okay, now I have 2 million tokens. So you need to give me my million from that I gave you before and another million because that's how many deposits I've been given when we finalize the settlement. So in a way, you just have two transactions, let's say on fiat, which is when you deposit and when you take the money out. All the transactions that happen in the middle, you don't need to have that settlement. All that was done on the blockchain. And that helps a lot to speed, and because everybody has the same shared data and everybody has the same data, the settlement doesn't need to happen. Questions? All right. So now I'm going to talk a little bit about this specific case of Libra. So first, before I start, ConsenSys is not part of a Libra association. This is not an endorsement of Libra of any kind, and opinions are my own. All right. So before I start, who have heard of Libra? Please raise your hand. All right. Curiously enough, everybody have, and that's very interesting. And that's part of, I guess, the reason why everybody's on, it got such a big reaction is because it's Facebook. So let me explain a little bit what it is and how it is structured based on what we know. And when I say based on what we know is because, there's no final thing. There's a lot of documents that have to be written. There's a lot of different things that have to be put out there before you could actually know how everything is. And the answer to a lot of the questions were, yeah, we're working on that, or it's going to be decided once we have the console. Because right now there's supposed to be 100 members on the console, but I think they just got interest below, for 20 something, like 20 or 30 people out there. So let me begin by the middle of it. So everything is going to be managed by what it's called the Libra Association. And the Libra Association is not Facebook. It's a separate entity that's in Switzerland. And it's going to have a council of members that's going to be 100 of them. So everyone's going to have one member, one vote kind of a thing. So some of the names that you see there are, very interesting and very important names. You got MasterCard, you got Visa, you got PayPal. There's some Spotify, Uber, Coinbase. Very, very interesting and very diverse. However, I don't see there any bank. We don't see any regulator yet. That's something that I guess it was missing, and it's important to highlight. So that will be the council of Libra Association. And the Libra Association, what they're going to do, they're going to be managing the Libra Reserve. So the Libra Reserve basically is what I was saying. That's the asset or the basket of assets that Libra is going to be pegged to. So that basket is going to have a value, and Libra is going to be pegged to that value. At the beginning, they were saying that they were going to have a little bit of a broader combination of different assets. Now they change and they say we're only going to have currencies, fiat currencies. I think 50% US dollars. I think 15-something% euro, yen, and I think the Swiss franc. I don't know, 5 currencies. That's it. So that's going to be the Libra Reserve, and the Libra is going to be pegged to that. Basically, then you're going to have a network. Each member is going to have a validator node, And so that's all the transactions happen. It's kind of what I explained before, like the diagram. It's just that each member has their own node, and each member has their own thing, and all that, including Facebook, of course. And in order to operate with that, you're going to have to use a wallet. If you see, it's a very specific application because basically they're just focusing on payments. And the wallet is just going to be to move Libras from one place to the other, basically, for payments. Calibra, which is, let's say, the wallet application that Facebook put out there, it's going to be a separate company from Facebook. It's not going to be in Facebook, but it's a separate company that are going to be there. And basically, it's a wallet. However, other people could build their own wallets and put it there. However, the Libra Association reserves the right to admit or not any other commits to become a wallet, because you have to check for regulation, compliances, and all the different things to make sure. So in a way, it's like we're going to check for compliances, but it's also, a very centralized kind of a mindset. So they're leveraging a decentralized technology, but still very looks alike. And if you see, because of the labor reserve and all that, it pretty much looks like what a central bank would do. And probably this is one of the reasons, because it's kind of we're proposing to withhold a central bank without no government managing it. It's going to be completely managed by private entities. So probably that's why that makes a lot of people feel very uncomfortable, in addition to the fact that it's Facebook, and we all kind of feel Facebook, we don't trust them very much. And another important thing is that what everybody wonders is, what's the benefit for the people that is in this? Well, probably for Uber or for other ones, the benefit is, to the same thing. If I pay for Uber using my credit card, Uber is charged for Visa or MasterCard every time I pay. I don't know how many of you, but Uber has Uber Cash, that they have it. So it's basically the same thing, the same logic. The thing is that I don't want to buy Uber Cash because I could only use it in Uber, right? I would prefer to have something that I could use in Uber or other places. So the fact of Libra would be that you could have like an Uber Cash, but it's accepted in many other places. So it's a little bit more useful and adds more value as a currency or a cryptocurrency than just using it by anyone separately. And so that's the benefit of, or at least that I understand for most of the members of the network. But also the Libra reserve could gain interest. They could use it to make very low risk investments, and because it could be a very big basket of assets, even if you just get 1% out of it, it could be a significant amount, and that's something that investors will have access to. In order to sit in that table, there's a few requirements, including having to pay $10 million that are going to go into the Libra reserve. All right. So some of the reasons why Facebook is probably doing this is they're facing a few challenges lately. One of them is, on the left, on your right, basically is that, they have shown very significant and incredibly big growth on mobile advertising. However, desktop is, pretty much a flat line. And if you see payments, you hardly see them on top of mobile advertising. So they have not really been able to convert or grow the payment services they have. So that's one opportunity that they would have with Libra to try to convert and earn on that. Another important thing is the growth of users is kind of also reaching scalability. They're growing, but they're not growing as they used to be growing. So the fact that they say that they're addressing the unbanked is a way to bring new users to Facebook. And there could be also another opportunity for Facebook there with Libra in place, which is to pay you for engaging. For example, I don't know, in New York, if I go in the subway and I want to have free Wi-Fi, I have to watch an advertising. So I'm sure I get free Wi-Fi, which is what I'm looking for. And New York, the MTA charges some company for the advertising that I just watched, right? So it's kind of Facebook could be doing that as well, like giving you something in exchange of something. Or if you make something that is viral, maybe it'll pay you, not necessarily maybe with Libra, but maybe they issue something that is pegged to Libra. They use a 2-token economy, and you would get something that you could later convert to Libra and use, right? So they could, for example, if you make something that goes viral, you get paid something, for example. So you will have people, because also another issue that is not only that the growth is stabilizing, is the fact that they're also losing the younger people. I mean, in 2011, I think they had significant loss people from 13 to 18 years old. So those people right now are like 25 to 30 something, and they have not regained them. So that's something that also Facebook, is considering, like, I don't want to lose my users. So there's another opportunity here. Another thing I want to mention is that, Facebook did not do this first. There's other people that have done it, which is, you have, for example, JP Morgan with JP Coin. They actually are leveraging the same Quorum Enterprise Ethereum technology that I show for the South African Reserve Bank. And they have that. They have a payment system that uses a tokenized asset for that. Also, like the Chinese government just announced that they are going to issue their own cryptocurrencies, that they're going to have few large incumbents get that, and they'll be the ones distributing it to the users. And this has not catch as much heat as it has catch for Facebook. So it's interesting to see that, everyone's okay as long as they're regulated entities, but when it's Facebook or other people or the private sector and all that, people get very uncomfortable. So probably that could explain why these have not really been as popular as Libra. Because how many of you have heard of any of these before I mentioned it? Raise your hand. All right, so just one person before everybody raise their hands, right? So a little bit about business opportunities, and here, rather than a specific case, I just want to give you like some ideas about things that you need to consider when you're actually exploring for how to leverage blockchain technology, so that it makes more sense. Sometimes I hear ideas that they could be done using some other technology, not necessarily blockchain. So it's very important that you kind of try to understand that. So one thing, I don't know how many of you are familiar with what's called blue oceans or first principle design thinking. So blue oceans basically mean, go to like where there's demand, but there's nothing. There's no opportunity. Like figured out like new products that satisfy completely new necessity that you have managed to identify. Kind of when nobody knew before the MP3, like the iPod, that we wanted an iPod. Kind of a thing. That's kind of what the blue oceans strategy is. Then the first principle design thinking is like, don't reinvent what you have. Like, don't just add technology to it. Don't digitalize an analogic experience. So, for example, like with payments, if you see a lot of the applications when you were having from banks and everything that they have, they basically just replicated the credit card on the app. And that's a physical experience, but they just replicated that. WeChat did completely the opposite. They just reinvented or changed the payment experience with a QR code. It has nothing to do. You don't get a picture of a credit card. It has a completely different thing. It's like your bank account. There's no credit card associated to it. It's, you go and pay. It's a completely different thing. So they changed the whole experience of payment. It's the similar thing as, give me another example. It's like, this probably will resonate better. It's like Henry Ford's famous quote, like, if I would have asked people what they wanted, they would have all said faster horses, right? Not a car. So it's kind of there. You have to figure it out, like, sometimes where are the changes that need to happen, and not necessarily it's a new product. It could be in the whole experience of the whole thing that you're delivering to people. So it's very important that you consider that when you are like exploring here, because blockchain is a completely new technology that enables new opportunities that we did not have before, and it's important that they figured out a way to leverage them. Another important thing is that blockchain is a network technology. That means that this right here has no use if I'm the only one holding it. The value of this device here is that everybody has it. So it's the same thing. So probably when you want to like think of how blockchain could be of value, you're probably looking at industry challenges, or you're looking at process across several market players that repeat themselves. So for example, KYC. Banks are pretty good at KYC. KYC, kill your customers with paperwork. Banks are very, very good at that. But it's something that we all could really improve if they would just say like, okay, we just have one onboarding of the customer. Let's say I go to Bank of America for the first time to open my bank account. My onboarding is done by Bank of America. Yes, Bank of America has paid all the expenses of onboarding me. but then all the information is available. So for whatever reason, it now goes to Wells Fargo or whatever other bank for maybe for getting a mortgage or a loan or something. I don't need to, again, submit my documentation. So I'll have it. Yeah, there's a fact that, there's less friction or less barriers for me to switch from one bank to the other, but at the end, the user switches. Their retention of the users is more of a utopia now than ever been. So it's very important that, they realize that. However, the benefit is like Wells Fargo probably will update some of my information out there or add some information that was not needed in my original onboarding, and that information will be also made available to Bank of America if for whatever other reason I go there. So that's a very clear example of how you have an industry challenge, which is to ease the onboarding of customers and reduce the cost there. And for example, like on marketplace, like I was giving a lecture or a class in Korea for a big manufacturer there, and they say, oh, so I asked, what do you want to use blockchain for? What's that thing that you want to do? And say like, oh, we want customers to ensure that they're buying genuine products. So say, oh, that definitely that's something blockchain is good for. So how you're doing that? Well, they're going to go on our website and they're going to put the serial code they could scan the code because they're going to have a barcode, so they could scan it, or we're going to put a QR code. They scan it and they're going to see the serial code is valid, what kind of product it is. So if you're buying a refrigerator, you're not getting the serial code of a toaster or something different. So you see that the products actually match. And then they're going to see who's the reseller that should be having that product, so that they know that they bought it from the right reseller, so that they, if warranty or everything, there's no issue with that. Oh, that's great. That's fantastic. But, I wouldn't use it. You say, what do you mean you would not use it? Well, I'm a customer. I would not go, if I go to a retail shop and I get out of it with a Samsung, LG, and Hyundai, Kia, whatever the other brands out there, I'm not going to go to 5 different websites to check for the product. Why don't you all get together and you put a one Korean brand genuine thing together, and you will all hold the data of yours and everybody will just check, but you have one single source for everyone to check for a Korean product. It's, it will be more powerful, you'll leverage it better, it's a much better idea. So that's something, for example, that makes greater sense. It's not that the other thing doesn't make sense, it makes greater sense when you go for something that could be, everyone's going to have to do it. It's the same process because every other one, if once you did it, everyone else is going to do it. But if you do it all together, the value and the network effect is bigger. And last, another thing important is like, you have to embrace the fact that things are going to change. Definitely some places faster than the other places, but cash, for example, once I heard like a remittance company say like, I know I have to do something, but what do I do? Because when all money is digital, what's my value? The only thing I'm moving money from one place to the other. If money could travel any geography around the world, what am I good for? So it's important and that's a challenge that they have. And also like blockchain will definitely remove intermediaries that do not add value. So those intermediaries that are in the middle that don't really add value, they're just taking their share just for being there, they're definitely going to be removed. There are going to be intermediaries that add value that not necessarily going to be removed. Everything is use case dependent, so it's not a general statement, but it's important for them to also figure it out, how do I add value in a network, or what's my role there, so that I actually make sure that I'll continue to exist in this network. And I guess just to finish, I'm just going to play this small video about, this is January 2015, when Alibaba was going. Now Alibaba is one of the top cases, like Ant Financials or Alipay and all that have grown, and I think they're on the top 10, if not top 5 financial institutions when they were created less than 5 or 4 years ago, which is when you have companies like, I think is Morgan Stanley, that are over 100 years old, and they're getting so close to them, right? So do you understand the importance of digital technology in this digital transformation?
So I said maybe in 10 years we'll be bigger than Walmart. You say, young man, you have a good hope. So we say, make a bet. I think in 10 years we'll be bigger than Walmart on the sales. Because if you want to have 10,000 new customers, you have to build a new warehouse and this, that. For me, to servers.
And thank you for your time.